So today we are joined with Dr. Hassan, who is the CEO of Sacco, and we're going to have just a conversation around issues where our Saccos are at, how's the business landscape looking at as far as Saccos are concerned. Thank you for creating the time, sir, to just have this discussion today.
Thank you, Fred, for hosting me. My first time in Metropole TV.
Yes.
I'm hoping there'll be many more other occasions such as this one.
That I guarantee there will be many more. You know, once you get in, there's no going out.
Thank you so much for having me on board.
All right, karibu sana. So let's start with where we are right now. You know, 2020, COVID-19 hits us hard, and a lot of businesses, get impacted. As Sacco, how did that impact inform your strategy and innovation around your products?
Okay.
Yes.
Fred, that's a very good question. And COVID-19 is now the new normal.
Yes.
To be very honest, in terms of strategic thinking and strategic planning, I don't think we envisaged a global pandemic.
Yes.
I don't know if there is any company that actually truly did. Of course, we have our BCP, our business continuity plans, but to specifically say that we foresaw the coming of COVID or a pandemic of this magnitude, I think the answer to that would be no.
Yeah.
So there was a lot of learning along the way. So COVID meant that we needed to rethink and reflect, review, unlearn what we actually thought we knew.
Yes.
Go back to our strategic thinking, ask ourselves, are we still relevant in this new normal that has been created?
Yes.
So it was also a wake-up call for the institution, just like it was for many of us, in terms of how we were doing business before. The simplicity of business had actually changed. For a long time before the vaccinations came, physical meetings were not even a possibility. And you can imagine our line of business is really about meeting people.
Yes.
So here's a scenario whereby you're being told you cannot come to the branch to be served. Then what does that mean for your institution? So what I can say is that COVID-19 was, for me, a way of learning afresh, reviewing our strategic thinking, reviewing our business continuity plan, and most importantly, reviewing our relevance to our members. Because on one hand, there was a global pandemic, but on the other hand, it did not mean that the members deserved any less in terms of being served. If anything, they needed more.
True.
They needed more of us. So the main impact, if I was to look at numbers in COVID, at the very beginning, we did offer moratoriums for those who are unable to pay off their loans. And if I do recall, we had actually done a projection that by the end of last year, we would have given moratoriums of up to 3 billion Kenya shillings.
Wow.
And this was coming because when we were extrapolating on a month-to-month basis,
Yes.
a number of people would come to you and say, you know what, my business is down. I was importing commodities from China. I can no longer get them on board. My business is in tourism or in hoteliering. I can no longer get customers. So when we looked at those kind of numbers, we extrapolated 3 billion.
Yes.
But surprisingly, the maximum moratorium we gave was just roughly around 900 million shillings. That's the limit it went to.
Yes.
Because as the pandemic continued and as we settled into this new normal, we could see these businesses that were being affected also getting new ways of continuing their sustainability, their long-term sustainability. And therefore you had institutions that had asked us for moratorium coming back and saying, oh, hold on, thank you very much.
Yes.
For these last 3 or 4 months, we are very grateful. We didn't have to pay.
Yeah.
But hold on, we're getting the hang of it. We are okay now.
Yeah.
So please just lift the moratorium and let's move forward.
Oh,
so
nice.
From our initial projection of 3 billion giving out as moratorium, we ended up giving 900 million.
Wow. Okay.
And by the end of the year, it had actually come down to 300.
Yes.
Because majority of the individuals were actually able to pay.
All right.
So that has been, for me, the direct impact of COVID in terms of the financials. But in terms of the business itself, it also meant that we changed everything about us. We moved from being a physical entity to a virtual entity.
Yeah, but most of the organization, you know, are innovating and going heavily digitally, because that is what, you know, like COVID-19 accelerated, you know, the digital space as far as concerned. Now let's talk about the products that you offer at Stima Sacco. What is it that differentiates you from the other players, and what can you say is these are products that are uniquely Stima Sacco?
That's a good question. There's so many products we have. Actually, if you were to look at our line of loans, we have more than 36 loan products.
Okay.
So I'm just struggling to say which ones I should pick for you.
Yes.
But maybe I should revisit this from the perspective of COVID again.
Yes.
The fact of the matter is that COVID made us change and rethink our model and rethink how we serve our members. And also it created, it made us aware of necessities that perhaps were there before, but because of COVID were now aggravated even more.
Yeah.
One of the key ones I'd say is around affordable housing. For a long time we've had these statistics, which personally I like to use the word shameful. It's very shameful for a big country like ours, more than 50 million Kenyans.
Yes.
To speak about having 30,000 mortgages or so. It's not right. Those two numbers do not correlate. 50 million people, 30,000 mortgages, there's something amiss in it. And what was amiss was that for a very long time, mortgages in Kenya were offered only to the apex of the pyramid, for those who are the de la creme of the society.
Correct.
So not even the middle class. The majority of people would not even afford a 15-year, 20-year mortgage facility. So we partnered with KMRC, the Kenya Mortgage Finance Company, which we are equity shareholders, together with 10 other Saccos. We are 11 Saccos in total, 8 banks and 1 microfinancial institution. And the idea was, are we able to bring up all these financial institutions, albeit we come from sort of different industries, banking sector, the deposit-taking Sacco sector, and the microfinance. But we had a common agenda, all of us. And are we able to support the government in the Big Four agenda? Affordable housing. So through KMRC, we're able to tap into money from the World Bank and the Africa Development Bank, which a few years ago would not have been a possibility. And this enables us, for example, as Stima, to give out a loan at a single digit, 9% per annum on a reducing balance basis for up to 20 to 25 years. Again, that will have been a non-starter. So it just happened that this discussion came around the COVID period, whereby we're saying it's becoming very expensive for Kenyans to actually get access to affordable financing. And hence, for me, I'd say this is one of the key products that I saw accelerated with the coming of COVID-19.
Yes.
Other products as well were really revolved around the aspect of our efficiency and our effectiveness. Because we also realized that because of COVID, then you really needed a very agile institution. If you're keeping money, you need to have not just a haven in terms of the safetiness of your money, but also in terms of accessing it. How quickly can you access money in Stima? So say your salary is passing through Stima Sacco. If I want my salary today, will I get it today? If the employer, your employer, the parent company is to send salaries for that institution today, it should reflect today in my account. So, and that's basically what we've managed to do. So we have a very unique product called Untitled Chapter that enables all our members to actually, just the same service you'll get in a bank. That if your salary comes in today, you've actually gotten a hold of it.
Wow. Yeah.
Which I think was very innovative on our end. Other products we've come up with include things like Sharia. We are the first Sacco, conventional Sacco in Kenya to truly offer what is a Sharia compliant product line. Why did we do that? We said, okay, hold on, for a very long period of time, there's a segment of this society that has been disenfranchised from the conventional banking, probably because of the beliefs that the community does have. So because of that, we went into a learning mode, and we are a learning organization. Every day we try to learn something new. So we asked ourselves, why is it in Kenya that the very big banks offer Sharia windows? And why is it that no Saccos is offering that?
Yes.
And because of that, we went into Sharia, into Sharia banking. So we do offer the complete suite of Sharia products, whether it is in terms of savings or financing. We do even have a Sharia advisory committee on board that actually helps us to do that. So I think that's another product I'd say, again, has been accelerated because of the global pandemic. And there are very many others as well. Every other day, we think, how relevant are we to our member?
Okay.
What is it that we're not offering to you that we're able to offer to you? So on a day-to-day basis, we're able to do that. Maybe one more I can also add.
All right.
Because of the pandemic, and like I mentioned, there was a time that we'd actually tell our members, please go to the mobile platform or go to a web portal, which is more or less our internet banking, so that we reduce the footprint, the physical need of meeting one another. But we also realize that, albeit the fact that you can have the ATM channels, you can have a mobile platform, you can have your internet banking, they will still need to provide other forms of access to we as Stima. We only have 9 branches across the country, and about what we call area service centers, there are 14 of them. But we thought that, okay, hold on, there's a missing link here. And the link is, if, say, I'm in a very remote area of Kenya and I want services of Stima Sacco, how do I get that? What if I don't have bundles? What if I don't have a smartphone to download an app, so to speak?
Yes.
Of course, I can use USSD, but what if the network is not even clear? What do I do? So we've gone into agency banking. So we have what is called Stima Sacco Mulangoni. The idea is very simple. We want that when you open your mlango in the morning, you should see Stima Sacco. So you'll be seeing quite a lot of our agents that are rolled out across the country. And the idea behind that is to enable us to have our members partake in services irrespective of where you are. Whether in Wajir, in Marsabit, Lamu, wherever it is that you are, we should be able to be there to serve you. So these are some of the products that we had to review.
Are uniquely Stima Sacco, so to speak.
Uniquely, so to speak, yeah.
All right. I mean, very interesting thing you brought there as you're coming to then this product you're calling agency, Sacco agency, where you open your door and you would see your Stima Sacco agent and you're able to get all the services that you can get at the branch at that particular point. How is this going to play out as we go along into the end of this year and get into next year? How is this going to play out?
We have had a very supportive regulator, and I always say that the success of Stima, we are currently 45 billion shillings in asset base.
Wow.
And growing. And with all honesty, I'd say that the success of our growth has been because we have an enabler of a regulator. So, of course, in terms of the expectations, they are as strict as CBK is to the banks.
Yes.
So we actually use similar ratios, very strict ones. But on the other hand, the regulator is also an enabler, because the regulator always has a choice of saying no to you. Think about it this way. When M-Pesa was coming on board, and if you remember the then governor of CBK, he had an option of saying no. I have no idea what this is.
Yeah, I don't want.
And I don't want it.
Yes.
But what did he say? He said, let's give it a
try
shot. Let's try it, and
yes.
then we'll regulate you.
Yeah.
And I think that is what we have, in a way, within our regulator has tried to actually emulate. So you'd find that the agency is fully owned by Stima. It is not the traditional agency whereby you go to a bank and get a partnership with a bank and then ride on the agents. These are truly our agents.
Your
Our
agent.
own agents.
Yes,
It's our own
run by
agents.
Stima Sacco,
Yes,
yes.
our own. Of course, it can be shared with anyone because the law does allow us to do that. But truly, this is our agency. It's our system, and therefore we are not even having a revenue share with anyone, which I think is one of the unique models that Stima Sacco is really attempting to do, to avoid a lot of revenue shares. Because when you do that, it means loss of income for the institution, and at the end, it means less dividends for our members.
Yes.
So the way the agency has been set up is that we have been piloting this for the last 4, 5, 6 months actually.
Yes.
We've done the piloting stage. The regulator is already on board, is visiting our sites just to confirm whether or not we met the criteria he had put forward. And thereafter, he'd enable us to open this to every other Kenyan outside there. So once that happens, my goal would be, with all honesty, within the next 1 year or so, to have minimum at least 300 agents of Stima.
Wow.
Now, you look at it in this perspective. The branch is always going to be a very important component of our business. We shall continue opening branches, but it is faster to have agents on board.
True.
So the agents and the branches actually fill a void.
Exactly.
And of course, as the agent grows, then that could also be the reason of why I need a branch elsewhere.
Yeah.
So for us, it is just part and parcel of a bigger thinking that as far as the channels are concerned, they have to be as wide as possible.
Yeah.
I want you to have an ATM. I want you to have a mobile platform. I want you to have the agency. I'd like you to walk into any of our branches and get our services.
Yeah.
And in any way that we can offer more channels to our members, the better it is for us. So
Yeah.
it is one of the very key critical drivers to move us to the next level as team.
Right. And for me, I mean, it's just even the possibilities that the agency model now opens up to create opportunities even for micro SMEs.
Absolutely.
I mean, that for me is even a big
Absolutely.
one.
And Fred,
yes.
maybe on that point, you're absolutely right, because it's not just about stigma, it's also about creating a lot of job opportunities,
Exactly.
machine learning, really making sure that people are able to get access to that service, but at the same time offering employment.
Yes.
And I think it works very well. Yes.
True.
Yes.
You mentioned about financing mortgage real estate. Now, with regulations from SASRA, at some point there was you can't do that, you can't get into it. So what is your exposure like in financing real estate here on your loan book?
Okay. Fred, that's a good question as well.
Yes.
The regulation by SASRA is very clear that we can get into real estate,
Yes.
or rather investment, but up to certain ratios.
Okay.
So there are very clear ratios that have been put in place.
All right.
You cannot have land and investment beyond, if I'm not wrong, is it 5? There's a percentile
Yes,
of
yes.
the total fixed asset that you do have. So as TIMA, we have never moved beyond that percentile.
Okay.
We have always been within it. But it does not mean that we do not have some small exposure to real estate. The exposure will be in this sense that if you're borrowing money from STIMA, one of the ways you can offer collateral is perhaps your house.
Yes.
So maybe in an indirect way, that could be the kind of exposure we could have.
Right.
But having said that, our lending is based on a model that is more of ability to repay than collateral based.
Okay.
So we do not lend to you because you bring collateral. We lend to you because of the character you have and also because of your ability to repay. We know you. The character is defined. You've been our member for X number of years. We can see the kind of transactions you're making. We know you very well.
Yes.
And based on that, we lend to you. And therefore, that also reduces the exposure of having to over-rely either on guarantors or to over-rely on a collateral, in this case, a house. Having said that, I'd say that when I look at our loan book, I'd say maximum 10% of it perhaps is what is guaranteed using that kind of model.
Alright.
Whereby you bring in a title or bring in a property and say, you know, from that property, please secure me. But the better way to answer this question in the right way, and the factual one,
Yes.
is this. If I may rephrase this question, I'd say that what is our portfolio at risk? What is our non-performing loan?
Loans, yes.
If you go to the industry, you'd find that in the banking sector, the average NPL is roughly around above 12% for a long time. In the Sacco sector, that has been about 7.5 to 8%.
Yes.
Stima Sacco, we had 4.7%. So that gives you an answer,
Yeah.
that our model is indeed right.
It's working.
That although we do have a loan book of almost 38 billion shillings, only 4.7% of that is what we consider to be a portfolio at risk.
All right.
Yeah.
Oh, interesting. And let's go to most formal financial institutions where you are also part of. Due to COVID-19, we're diversifying and just moving away from the interest income. Is it the same scenario with you guys, or you're still stuck on that interest income portfolio, so to speak?
That's a very good question, Fred.
Yeah.
Very, very, very good one. Because it makes me think. And I want to answer that question in two parts.
Okay.
The first bit is who are we?
Yeah.
We are, in all intents and purposes, a cooperative. And what is a cooperative? A cooperative is an association of people. And my next statement is going to cut a bit.
Yeah.
We are not an association of money.
Okay.
So unlike other financial institutions, where money is put together.
Yeah.
So we associate people, not money. And the people who are part and parcel of Stima are not our customers. They are partly our customers, but they are firstly our owners, our members. And that is the beauty of the cooperative model. So these owners we have a responsibility to them. And the responsibility is a very simple one. If you're to look at our balance sheet,
yes,
for a very long period of time, for the last 3 or 4 years, you'd see that we have a segment there called external borrowing that has always read zero. That means that we have never had to borrow money from anyone.
Okay.
Now, it's a good point because it means where do we get our money from? We get our money from our members.
Yes.
And then from our members, we're able to lend out
Yes.
to them as well. And I'm answering this in a very long way.
Yes. So
but I want you to appreciate
yes,
that interest income will always be a very key component to us. Because the interest income is being derived from the loan that we have to give our members.
Exactly.
And our core reasons of existing is to benefit our members.
Okay.
So that is the longer version of that, and the right version as well. However, in terms of strategy, you cannot over-rely on the loan interest alone.
Yes.
I think as per our books, 85% of our business is the loan interest.
Okay.
15% is where we have managed to diversify into other sources of income.
Yes.
So to summarize this, what I'm just trying to say is that we do have a need for the members to be lent money to, and that will always be one of our key reasons of why we exist. But also in a very strategic way, we'll always look at other sources of income. You'd see that the banks are very good at offering a hashtag here, armchair banking. Somebody once told me that.
Yeah.
That you don't struggle so much to get income.
Yeah.
For example, putting in money into bonds and bills that are giving a long return. I've seen medium-term notes that are being offered within the market as well. As long as we do not dilute our core business, which is lending to our members,
yes.
and our members are completely satisfied, then we can always look at other means of generating income apart from the lending bit.
All right.
I hope that makes sense.
That makes sense. Because I like the way you explained it, that your core is a people who have come together. And so you have to satisfy these people first before you can think about other areas of diversifying too.
Absolutely.
You spoke about when you're thinking about lending and your exposure, there's a character you've learned about these people because they've been your member from before. And I'd like to have a discussion around how you work with credit information sharing services in the country. But before we get to that, let's touch a bit about, we've seen Saccos graduating and becoming banks. And here you are, 45 billion in assets, and is there a plan to eventually, go that direction? I mean, everything that you've mentioned is bank, but in a Sacco form. So now, is there a plan to eventually, go the direction that some of the Saccos have taken to become banks?
Fred,
Yes.
We have no intention,
Okay.
absolutely,
All right.
whatsoever,
Yes.
to ever become a bank.
Okay.
And I'll tell you why. First and foremost, anything a bank can do, we can do.
Okay.
And we actually strive to do it even better. By regulation, there are only two things that really do not make us a bank.
Bank, yes.
One of it is foreign exchange. By law, Saccos are not, we do not have the right to transact in foreign exchange.
Yes.
For example, we do have members in the diaspora. So say you're in America and you're seeking a loan from Stima. You could bank the money in terms of your savings in dollars, and obviously we'll convert that into Kenya shillings. But if I was to lend to you, I'd lend to you in Kenya shillings. So I cannot lend to you in dollars. So that is the one thing that really differentiates us from a bank, a limitation, if I may say so. The second one is access to the national payment system. The banking sector has direct access to the national payment system. We don't. And we need to use a bank as an intermediary to actually do that.
Okay.
And hence, back to my point of there being a lot of revenue share between the deposit-taking SACCOs and banks.
Yes.
So, for example, if I was to send money to you, probably there will be an intermediary bank somewhere in the middle, which is being addressed by the State Department of Cooperatives. We've had a very deep discussion with also the regulator. And there's something coming up called a Sacco. It's a Sacco shared platform, whereby it will enable all of us SACCOs to come together and have direct access into the national payment system. Yes. And I kid you not, that's a game changer in this country. It means, therefore, that if I'm sending money from Sacco A to Sacco B, it will be sending money directly. If I'm sending money from your bank to another bank, it will just be a very direct transaction. So these are the only limitations we have. Right. Apart from that, anything else we offer. If you want a checkbook, you're going to get it. An ATM card, you're going to get it. Like I've mentioned, mobile platform, you're going to get it. Anything, an RTGS, an EFT, you'll get that from a Sacco. And I assure you, from Stima Sacco's perspective, we are very confident in terms of our timelines. So whatever timelines the bank gives you, if it's a T+1, I assure you we're going to give you a T+1 as well. So therefore begs the question, why become a bank if we can do everything a bank does, apart from those two limitations I told you?
Yes.
And also look at our strategic thinking. The largest Sacco in the world, what they call credit unions in the US, is the Navy Federal Credit Union. If you were to Google this, you'd find that it has an asset base of more than 12 trillion Kenya shillings. Wow. And that is not a slip of the tongue. It's 12 trillion.
Yeah.
Now let me ask you, and I know you're the interviewer, but allow me to ask you.
Go ahead.
The biggest bank in Kenya, what is the asset base? So, without going into that, you can actually just see the difference. Again, even if you just to Google that, it's 12 times bigger than the largest bank in Kenya. Yeah. And that is a Sacco. So we have bigger dreams. And our bigger dreams is that when you look outside to the developed countries and the developed nations in terms of the cooperative movement, Canada, there's Van City Credit Union, amongst the largest Saccos in Canada, with an asset base of more than 7 trillion Kenya shillings, owning banks and owning anything else. So outside there, Saccos own banks. Okay. It's only in Kenya that sometimes we have that notion that Saccos are second-class financial institutions. No, we are not. Fred, we are not. And I want to assure that to any Kenyan who's listening to us outside there, a Sacco is not a second-class financial institution. We are as good as any other institution that is outside there. And if you go, and that's what Stima has been doing, is really to benchmark and say, from the aspect of Kenya, we're the second largest deposit-taking Sacco in Kenya, second largest in Africa as well. But we don't look at that. Because if you do, then you conform and you start feeling umefika.
You've arrived.
You've arrived.
Yeah.
You're not there. Yeah. So from a 45 billion asset base, we look at the 12 trillion outside there. Okay. Maybe just to make this, just to rub it in just a bit more. Okay. Our GDP as a country is how much? It's not 12 trillion, isn't it? So there's a Sacco outside there that can fund our country for a whole year.
Yeah, true.
A Sacco. Yeah. So again, back to your question.
So your goal is...
So do we want to become a bank? Absolutely not. We would like to be the Navy credit unions, the Van City, and the like of the world.
All right.
Yes.
And that puts it clear and puts it to rest. So anybody who's thinking that you're aiming to becoming a bank, you're not.
No, absolutely not.
Okay.
Yes.
I know we are coming to the tail end of this discussion, and there's a lot more that we can have a discussion around. But let's talk about credit information sharing. Regulations 2020 brings you into the same bandwidth with all the other banks and financial institutions, and now you're required to share your information, both positive and negative. How did that impact your business as Sacco?
Stima has been lucky for a long time. We actually sit in the governing council of CIS. And we have been very progressive, even before the regulations did crop in. We have always attempted to just be one step ahead of the regulation, to try as much as possible to create the awareness. You see, for our side, sharing information is a business need. You remember we talked about character.
Yes.
But character is not just about the data I have. It's really about the shared data we all have.
Yes.
And for a very long time, what you'd see is that individuals will borrow from Saccos, then go to banks and borrow. And then when it comes to payment, you have an issue. Because the Sacco kind of loans were not known, or do not exist, so to speak, as far as information sharing is concerned. Because the Saccos will predominantly only share the negative. Actually, very few Saccos have been sharing the negative information, not even the positive one. So Stima, we are striving to make sure that not just we are actually sharing information, but majority of the other Saccos as well. So we are having an engagement with our regulator, with the other Saccos as well, to get them more on board as far as awareness of the new regulations that have come up. And not just doing this because it's a regulation, but doing this because it is good for us. It is good for us to share both the positive information, the negative information, because it builds now on that character lending, whereby I know Fred, but apart from knowing Fred, I know Fred borrowed from XYZ, and he's a good pair. So we hardly use that information, even in Kenya generally. We hardly use the positive information to give a credit score for individuals to borrow. So we are way behind. When you look at South Africa and majority of other countries, including in Europe, it is that positive information that really talks about your scoring. If you go to the US, the same thing actually applies. So we are not there yet as a country. As Stima, we are striving ourselves to be amongst the leading institutions in Kenya that do partake both in terms of the negative listing and the positive listing. But we also know we cannot do this alone. There's no point of Stima as a Sacco being the only one who's doing it, and then the other Saccos are not. Then that still creates a gap. The way that this works is that every person shares the information, every financial institution, whether you're an MFI, whether you're a money lender, digital lender, whether you're a bank or whether you're a Sacco.
Right. Yes. Okay. And then Mashujaa Day, President makes a declaration.
So that's a loaded question for me.
All right.
But I'm a very candid person.
Okay.
And may I say that perhaps we need to look at who advises, and whether the advisors are also the technocrats. Because this has been mentioned before. This is, do you call it a Pyrrhic kind of win for the borrower? Because what it means is that, yes, 5 million and below, from my understanding, was an SME, an MSME, which we don't even know what that is, because there's a question mark around that. Are individuals falling in that category or not? But depending on how the interpretations will come from the Treasury and everyone else who's involved, the biggest problem here is that, and we saw that in the last time, the moment you stop listing individuals, it also means that as a lender, you are more cautious. You're just saying, hold on, there's a red flag, and there's a higher risk around that particular category. And what might mostly likely happen is that for those who are very dependent on the CRB for listing for defaulters, would shy away from lending to that particular category. So again, it sort of defeats the purpose of ensuring there's availability of the loans for everyone. And that's why I'm calling it, it's a win, but not necessarily a win. And we've seen that over and over again, even when there was the issue of the fixing of rates. You could actually see that banks would just shy away from lending from individuals because majority of people are into risk-based kind of lending. You look at somebody and say, because of your risk, the interest rate is lower, but this one slightly higher. But if you take that away, then you're taking away from the market the ability to be able to balance that equilibrium. Time will tell us how it goes. I think it was done in good faith, but with all honesty, I do think that the technocrats and those who are in practice, both in the banking sector and the Sacco sector, perhaps ought to have been a bit more involved, just to understand, even in terms of rollout, how exactly this is going to be rolled out.
All right. So, in essence, it's probably not a good idea. Well meant, but not a good idea.
It was a well-meant idea. Time will tell us whether it is a good idea or not. And the only way to showcase that would be to look at the lending. And I think I saw that as a country we were recovering. We had seen almost a 6.8% increment in the lending globally as a country.
Yeah.
So let's look at the data. The numbers don't lie. Numbers will tell us whether we are right or not.
Now, coming to a close, where does the future, how does the future look like? I mean, as we are benchmarking with the 12 trillion and 7 trillion, and here we are at 45 billion. How are we looking at the future?
So, COVID-19, the global pandemic obviously has had an impact on everyone.
Yes.
Stima included. When I look at our trajectory, it is still a staircase.
Yes.
And I've not seen a dip in that staircase. So if I was to show you a graph, you'd actually see from the year 2007 to date. I'll be just trying to find out that projection, and you can actually see the staircase in it. We are looking to be a 75 billion institution by the year 2024. We have not changed our strategic plan in terms of our numbers, albeit there being the COVID pandemic. A lot of, like last year, there was a challenge that was really being thrown at us that we needed to sort of rebase our thinking, rebase our numbers. We said, hold on, we don't even know how this thing is going to pan out. So why don't we just maintain the same targets we had and see what happens? Last year, we missed our targets by merely 4%. 4 only. And I think that's a very big achievement.
Yeah, it is.
4%. Taking into account what has happened across the world, many institutions being closed, for an institution to achieve 96% of its target in a full-blown COVID year says quite a lot.
Yeah.
This year, our expectation is that we'll meet 100% of our target, insofar as our income lines are concerned, and potentially also meet our asset-based target, which has been, of course, harder to grow because of COVID-19. So when you look at our growth, 75 billion is our thinking. Within the next 2 to 3 years, we think it is achievable. The staircase actually demonstrates that. But it also means that as an institution, we have to keep on rethinking, reviewing our relevance. And I think that's a very important point. It's the one thing, Fred, that keeps me awake at night, is whether or not Stima DT Sacco is still relevant to its member. That's the one thing that keeps me awake. I keep on asking myself that question. And as long as we get that answer right, that we're still relevant to our members and that we add value to them, both in terms of they seeing us as a safe haven for investment, number 2, a good place for return of the investment, and number 3, that we are agile enough and that we are investing enough in terms of technology and the new ideas that are cropping up, then I do think that we can still achieve that. Once we hit the 75 billion mark, ask me that question again.
All right. Then we can talk about 150 and going forward.
Absolutely.
All right, cool.
Yes.
Thanks a lot for your time. Is there any final remarks that you want to give us to conclude?
Maybe to our members, what I'll say is that Stima Sacco has been in existence for 47 years now. We have been very successful. But we do not think that the last 47 years is what we're going to do in the next 47. So look out to very new innovative ideas coming from Stima. We believe in disrupting the market. We do believe that we have something to offer to you. We believe that the youth who have not had a very good stay within the Sacco societies, we do believe that this is the society for you and for you to take this up for the next 47 years or so. We are a safe institution and we are a haven for investment. And we welcome you to be part and parcel of this great institution.
All right. Yeah. Thank you, Dr. Hassan. Dr. Hassan, CEO of Stima Sacco, wakes up at night to think about whether they're still relevant to their members, and so what else can they do to innovate, having been in existence for 47 years, and the next 47 years, what does that look like? Thank you so much, sir, for your time and just having this candid discussion with us. We am sure that people who are watching, they really learned a lot, including myself. Yeah, learned one or two things. Let's do this again soon.
Inshallah. Thank you for having me on board. I really appreciate it.
Kareem,
Thank you so much.
Thank you. Thank you for your time. This is Business Center.